I'd like to thank everybody for joining me on the call today. Today, I want to talk about how to design a life insurance policy. And if you understand life insurance and how life insurance policies can be designed, there's a lot of flexibility. And a lot of times I hear we refer to it as a Swiss Army knife of planning. Well, with that comes how to plan. And I like to take the approach, look at life insurance and design it based on your client's goals. And make sure we understand what their goals are. So as we're designing the policy, we're going to get a result that the client both needs and wants. So when you start looking at life insurance, it helps to understand as a planning tool, what can it do for us? Well, think about the areas of planning. We can have tax planning, we can have estate planning, we can have retirement planning, we can have business planning, all of these different areas. And we know we can add more puzzle pieces to the planning arena. But all of these have one thing in common. They can be hooked together by life insurance. Life insurance is that kind of that glue in the middle that helps us achieve our goals. I come from the planning world, back from the attorney side. And from the attorney side, originally I thought, okay, I can accomplish everything that a client needs. And I can, especially in the estate tax world, I can wipe out their estate tax. I just need time. I need time and a client that's going to want to plan. However, in our planning, sometimes we don't have time. We don't, we need to make sure we're covering those holes today. Well, the beauty of life insurance is it can plug those holes. We can leverage both for retirement planning. We can provide that estate planning tool to cover the estate taxes. Yes, we want to plan and reduce the estate taxes. That is a goal. But what do we do between now and when we can eliminate the estate tax? Well, if a client will die when they're supposed to, we don't have a problem. But life insurance is that what if tool that we have planning both for the future and for today. We can add all of our new riders and those types of things to just keep plugging those tools. As you look at life insurance, there again, goal-based planning. Are we planning for death benefit? Do we want to maximize the death benefit? Now, most people, when they think of life insurance, think about this as the only way life insurance is designed. Maximum death benefit, minimum cost. Think term insurance. Term insurance is that stripped down model. I pay a little bit of premium, and if I die, my heirs get a big death benefit. Well, that's good if that's our goal. Now, a lot of times, and I see this promoted out there, we're always planning now for cash value. Well, with cash value, we want, there again, a low cost, but we want to add all that additional premium in there to build up the cash value. So now we want the minimum death benefit just right at the modified endowment contract line so that we're pushing as much premium in there to grow that cash value tax-free so we can access it tax-free. So understanding our goals will lead us to starting the design process. Now, if you look at the other benefits of life insurance, number one is we get an income tax-free death benefit. Now, we can violate this. There's ways to do this, transfer for value rules, 101J in the business world. There's things that can make this policy income taxable. It's hard to do, but it can be done. Number two, we get income tax-free growth and distributions of cash value. There again, as long as we're designing the policy the right way, we get to grow this policy tax-free. We get to access it tax-free. There again, you can violate this if you don't plan and don't set up the policy properly. This is the one I like because as we're looking at using life insurance for more of a retirement income, the beauty of this, we can access this policy at any age. We always talk about retirement planning, but what happens if there's a hiccup between now and when our client wants to retire? Well, the beauty of this is there's no penalty if the client needs to access it early, and there's no required minimum distributions if they don't need to access it in retirement. They can pass on a bigger benefit to their heirs. So it's one, access is a big key and great for life insurance there, again, designed properly. When I see a lot of comparisons, life insurance to Roth IRAs, the problem with Roth IRAs is we have limitations in how much we can put in. As long as our client's insurable, we don't have a limit on how much we can put into this policy. So if they want to put 100,000, 200,000, $1 million of premium, as long as they're healthy and have the required net worth, we can get that money into that policy on the terms that our clients want, not on terms that the IRS is saying you're allowed to have. Finally, the unique part of the industry is its ability to create more opportunities and uses for life insurance to meet our clients' needs. So these riders that we can add to the policy, we can have a no lapse guarantee rider, which means that death benefit is going to be guaranteed as long as our clients paid the required minimum premiums. The other part of this is adding long-term care type benefits or long-term care riders. So these long-term care riders or chronic illness riders will allow our clients, if they need to cover long-term care bills, to accelerate that death benefit income tax-free and use that to cover their long-term care. There again, maybe that's not what we designed the policy for. The policy was designed to pass on death benefit to heirs. Maybe it was designed to, have cash value for retirement income. But what if? That's the beauty of life insurance is, what if things change? And these riders can add to that what if to help our clients understand and know no matter how life, affects them and changes their goals, the life insurance can add benefit no matter what we're doing. When you're looking at life insurance, one of the things I think gets overlooked in our planning is who should be the owner and beneficiary of the policy. If you look at this, we have business reasons to set up the policy. It might be a buy-sell agreement, might be a key man policy, executive benefits. All of these, we need to take a step back and say, who should be the owner of this policy and who should be the beneficiary? A lot of times the business should be the owner of the policy and also the beneficiary. If I'm doing a buy-sell agreement and it's a cross-purchase agreement, well, it's not the business that should own it. It should be the owners of the business. We've set up an agreement that is affecting the ownership of the business, but isn't tied to the business. So we need to take that extra step in our goals, make sure we address who should be the owner in the business world. Of course, on the personal side, we've got estate planning, we've got income replacement, we've got cash value access, living benefits. There again, do we want it in the estate? If we do, then the owner can be, the individual. The beneficiary can go to a spouse. If we want it outside of the estate, yes, it's personal planning, but now we're going to have it outside of the estate, inside of an irrevocable trust. There again, think through who should own this policy, who should be the beneficiary of the policy. The owner is going to have access to the cash value. The beneficiary is going to receive the death benefit. Do we have the owner and beneficiary structure set up the way that it needs to be? And so remember, goal-based planning. We're looking at what are the goals of this policy. We designed the policy. Don't all of a sudden get to the finish line and we have the wrong owner and beneficiary on that policy that now blows up our planning because we just didn't fill out an application right or change the policy ownership and beneficiary structure when we see those needs. The good thing about this is life insurance can help us complete the puzzle for our clients' planning. It can, provide business protection, family protection, benefits for retirement and long-term care. And really what I like about life insurance, it covers that what if. What if things change? Which we know things will change for our clients. If it changes it enough, let's revisit that policy, do your policy reviews for the client to always make sure the life insurance is in a position to cover our clients' goals and needs. I appreciate everybody getting on. If you have questions, feel free to reach out. If not, we'll talk again next week. Thank you.